What can sports teach you about stock market trading? Well, I covered in a previous video a little bit how looking how a sports team is rostered is a great way to sort of create a stock portfolio. So what I wanted to do was take this video and expand on it further and show you how if you look at a successful sports team, it can show you how to structure a great stock portfolio. So let's look at teams that have won championships in all four of the major American sports. So I'm going to look at baseball, football, basketball, and hockey. Now, one of the things that you want to know is that each of these sports are very different. Football is very different from basketball and hockey and baseball, but they do have a couple of things in common as far as championship teams are concerned. And here's the first thing is that championship teams learn how to pace themselves. And what do I mean by that? If you look at the standings at the end of the regular season, the team with the best record doesn't always win the championship. In fact, if you look at the statistics, it's really about 50% of the time the team with the best regular season record goes on to win throughout the playoffs and win the championship. So what does that tell you? It tells you that it's very, very important to pace yourself. So how do you adapt that to the stock market? That means you don't want to try to outperform every month in the stock market. You don't want to try to get 5% every month, because if you do that, you're going to make some dumb moves. If you have a baseball team that tries to win 120 games, they could overuse their pitchers. Their pitchers get injured and then they become useless during the playoffs. They could have hitters that, get overstrained. Their catchers need rest. Their players get overstrained and you have injuries, and then during the playoff season your star player might be out during the playoffs. So the same thing in the stock market. If you're trying to outperform every month, you're going to make bad stock moves. You're going to buy stocks that are not good for the long term, and you're going to end up underperforming. So here's just an example of a couple of teams that didn't have the best record during the regular season and then they won the championship. In the 2017 baseball season, the Houston Astros won the World Series. However, the Dodgers had the best regular season record. The 2017 NHL Stanley Cup champions, the Pittsburgh Penguins, they didn't have the best record. The Washington Capitals had the best record. So there's look at pacing yourself as far as investing. You don't have to make a trade all the time. You don't want to overtrade. Now, what is the second way you can look at sports that will help you with your stock portfolio? Well, there's an old saying, and this saying actually applies to all four of these major sports: baseball, basketball, football, and hockey. And that saying is, offense wins games, but defense wins championships. So what does that mean? Well, a championship team knows how to score on offense, but more importantly, they know how to prevent the other team from scoring. And one of the great examples of that was in the 2017 football season with the Philadelphia Eagles. The Philadelphia Eagles did not have the most dynamic offense out there, especially throughout the playoffs where they were underdogs. But what really allowed the Eagles to win the Super Bowl was their defense. They had to go up in the Super Bowl against the New England Patriots with probably the best quarterback of all time, Tom Brady. The New England Patriots have one of the most dynamic offenses, but the Eagles were able to use their defense to prevent the Patriots from scoring, putting up the usual 35, 36 points on their opponent. So defense is very, very important for a team to win championships, and it's also very, very important for you in the stock market. And by defense, I mean you want to prevent losing, taking big losses on a stock trade. And the way people take big losses is if you sell during a market crash. I did a previous video about the biggest gains in a stock market come within days after the biggest decline. So you want to hold on through a stock market crash and prevent yourself from panic selling at the bottom. You don't want to trade on margin. You don't want to overtrade. That's going to cause you to take a lot of losses, and that's not good defense. You always want to have good defense in mind. Now, the final way you can look at a sports team and use that when your stock market is, you want to build around a superstar. Now, if you look at teams that have dynasties, the one thing in common is they have a player and usually a coach, and they keep that player coach for a long period of time. So just as a dynasty, for a couple examples in basketball, the Lakers, who were dominant during the 90s and early 2000s, they had Kobe Bryant. They had Kobe for they held on to him for all 18 seasons, and he won 5 championships for the Lakers. For the Spurs, it was Tim Duncan throughout the 2000s and the early 2010s, stayed with that team his entire career. They won 5 championships. In hockey, for the Penguins, it's Sidney Crosby. He stays with that team. That team has won a couple of Stanley Cups. For the Yankees during the 90s and early 2000s, it was Derek Jeter. In football, Tom Brady has stayed with the same team for 18 seasons. And if you know anything about football, it's very, very rare for a team to keep one quarterback for 18 seasons. A lot of times, football teams will sometimes dump a good quarterback because they feel like, well, he's old and we don't want to get him on his decline. Tom Brady's 40 and he's still going to be the starting quarterback for the Patriots as of the 2018 season. So for a great stock portfolio, what you want to do is just all you really need to do is find that 1 or 2 stocks that's going to perform well over a 15 to 20 year period. In fact, I go back to Warren Buffett a lot, but he had a great saying here. He said that the majority of his wealth came from just 4 stocks. Now, I don't know what all 4 stocks were because he didn't list them, but I do know for a fact that one of those stocks is Coca-Cola, and he's owned, I think Coca-Cola is one of his first positions, and he's owned that stock for 60 years. So obviously the majority of wealth came from that one stock. So what you want to really do is build your stock portfolio out of that one superstar stock. Find that Tom Brady, that Tim Duncan, that Sidney Crosby, that Derek Jeter of stocks, and just hold on to it, because you'll be able to ride that stock for decades, and that's going to be your superstar stock. So I hope that was really helpful for you. Look at your stock the way you would build a successful sports team, which is, building around a superstar. Offense wins games, but defense wins championships, and then pace yourself. Don't try to be over aggressive, because that will end up causing your portfolio to get injured. So I hope this was helpful for you. If this video was, please be sure to like, share, and subscribe. Okay? Thank you. Bye.